Talking about SBI Life, and the numbers were higher than expectations, with VNB margins rising over 220 bips on a year-on-year basis. My colleague Yash Jain spoke to Amit Jhingran, the MD and CEO of the company, and began by asking about their anticipated growth outlook for the new financial year. Listen in.
These numbers have been a result of the continuous implementation of a strategy that the company had for the entire financial year. And particularly the Q4, we have been able to reap the results of whatever we did in the first 9 months. That resulted in growth on a very strong base. You will notice that this 9% growth on individual APE basis, it is around 13%. So we are satisfied with the kind of growth that we have got. And going forward in the next financial year also, we are looking at a growth of around 14% on individual APE basis.
Okay, a 14% growth on the individual APE basis, and considering the share which individual APE has out of total APE, what is the kind of growth that you anticipate on the total APE basis? Because that will also help us to understand, the things on VNB as well as the margin side.
Company is very mindful of having a growth which is optimal for all the stakeholders. So you would have noticed that during the last financial year, our group mobilization was somewhat muted, and that was because of the market conditions. We didn't find it worthwhile to go very aggressive, because that would have been margin negative. For the coming year, we will see how the interest rate scenario in the market works out, and depending on that, we will have appropriate strategy in the place.
Okay.
We will be continuing to be mindful of the optimum benefit for all the stakeholders.
Okay. But the number on the total APE basis, do you have a number in mind, just like you're targeting?
It should be somewhere around 12%, I believe.
Okay. One question that I want to understand before I speak to you about the margins is on the ULIP portfolio. Of course, for the industry, less for you, but still a higher ULIP portfolio, higher traction there does impact margins negatively. Now, in the Q4, because of the market volatility, the ULIP interest did come down for players across the industry. For you, I want to understand Q4 FY25 on a year-on-year basis, how did the ULIP share change out of your total product mix? And now Q1, is the demand for ULIP starting to come back again, or do you think it's more or less stable at the same levels?
The contribution of ULIPs in the Q4 for the company was also muted, but it was on account of two factors. There was one, volatility in the market, which might have affected. But secondly, also company's conscious strategy to have a healthy product mix. We launched 4 new products in traditional segment, in participating, non-participating segment, in the children segment and all. And during the quarter, we got some good traction. We also focused on making our agents and distributors active on these products. So that resulted in a healthier mix, lower ULIP portfolio in the Q4.
If I have to now speak to you about the margins came in much ahead of estimates, about 30%. Now, I just want to understand from you, in the Q4, what helped the margins going forward? As I said, your APE is expected to grow at about 12%. That will align in your favor. You'll have a better product mix, a more stable product mix, and favorable base effect also. For FY26, where do you see the margins to come in?
So during Q4, our VNB margin was at 30.5%, which showed a healthier growth on account of the change in product mix, which the company has been planning for last 3-4 quarters, and it started yielding results.
Okay.
Going forward, we provide a guidance of around 28% at the existing level for the next financial year also.
Okay. You said you are providing a range. Now, when you say 28%, would the range be 26 to 28%, or would the range be 28 to 30%?
I will say it will be around 27 to 28%.
27 to 28%.
Maybe some positive bias.
Okay. So, as you said, a total APE growth of around 12%, retail APE growth of about 14% is what you expect, and margins of about 28%.
Yeah.
Right? Accordingly, would the VNB be about 13 to 14%? Is that understanding
That
correct?
is what I am looking for, around 14% of VONB growth also.
VNB growth. One other thing that I want to understand, and this is on the distribution mix. You've been focusing very strongly on the agency network also. The agency is growing much faster than bancassurance. What is the growth that you expect in both agency network for FY26, bancassurance for FY26? And as far as the distribution mix itself is concerned, now if I look at the numbers, your distribution mix from bancassurance did come down in the financial year as compared to agency. Where do you see more changes coming in that distribution mix between agency and bancassurance in FY26?
Company has identified a lot of opportunities in the agency channel also. And that is why in last financial year, from the month of April itself, we launched an initiative called Agency 2.0. We have been opening more number of branches, employing more agents, and also trying to improve the agent productivity. All this has resulted in a good growth of 23% in the agency channel in last financial year. So this higher growth in agency channel has provided us in mitigating some of the concentration risk in the distribution channel, also improving the agency channel contribution by around 2%. Going forward also, we will continue to tap opportunities by creating more infrastructure in agency channel, opening more number of branches, and improving agent productivity. So we are looking for around 25% growth in agency channel in the current financial year also.
In the current financial year, the share right now of total APE between bancassurance and agency is 61% to 28%. How do these two numbers change with the growth that you're anticipating?
So we are looking for a 25% growth in agency channel, which may give a agency channel contribution of 30% plus in the coming
30% plus. And bancassurance will come down in a similar proportion then in that case?
Obviously, but not because of any reduction in bancassurance channel, but because of the higher agency contribution.
Okay. Just a little word on the higher surrender value. It kicked in from October, the regulations. Has there been any impact on the margins? Though the margins have been strong, but still, could the margins would have been a little stronger if, not for higher surrender value? Do you think there was some impact in the second half of FY25? And in FY26, do you stick to what you had said, that the impact on the margins won't be more than 50 basis points because of higher surrender value?
What was in favor of the company that our surrender values prior to the regulation were also higher. So with the introduction of new product range in line with the changed regulation, our pricing didn't get affected much. So the actual experience of surrenders will start coming after 1 year of the product introduction only. So we are very sanguine that our assumptions, whatever we have made for the new product range, will stand out, and we will see how the actual experience vis-a-vis our assumptions come out, and will decide accordingly.
Right, that was the management of SBI Life. The stock doing extremely well. The management sounding reasonably optimistic as well. With that, we'll take a short break, and as we do that, even as the market has shown some signs of recovery, and we started the show, it was closer to 23,900. Now it's closer to 23,975. So there has been a recovery from the lows. We'll get you some good news. That is India's business news leader, which is CNBC TV-18, is now just a click away, which is the CNBC TV-18 all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. What you got to do is download the app, and you can either get it from the Apple Store or the Google Play Store, or just scan the code which is there for you on the screen.